Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week. We're going to start off from the dollar index, and this is the monthly time frame. I just still want to give us a very quick recap from the monthly time frame. So what we can see, last previous months and weeks, we've been making reference to the fair value gap we saw here, the bearish fair value gap. From there, we started making this forecast to expect the likelihood of this bearishness to the downside, when we saw price failing to give us what? Volume closing above the previous monthly candle we have here. So what we can see is this is the last up close candle before the bearishness to the downside. Price returned to that sponsorship zone, and we can clearly see the rejection. Price gave an indecision candle here, and we can now see bearishness to the downside. This is the month of March, giving us bearish volume to the downside. So clearly this is the first draw on liquidity we identify. And now we can see how the month of March just dipped to the downside with volume going below this bullish fair value gap here in the monthly time frame. So this became the drawn liquidity we started identifying when we saw how this impulse began in the month of March. And we can clearly see this is the monthly bullish fair value gap, and price have dipped into it. Though we can see that price have not dipped yet into the consequent encroachment of this bullish fair value gap here in the monthly time frame, which is the drawn liquidity. So clearly now we are seeing bearishness to the downside, the likelihood of price taking out the sell side liquidity. So let's check the weekly time frame. Here in the weekly time frame, what we can see, this is the monthly bullish fair value gap. Here's the consequent encroachments, and within the monthly bullish fair value gap, we can clearly see we have this fair value gap here in the weekly time frame. And we also have this other fair value gap here in the weekly time frame, which in confluence we can see that we have the consequent encroachment of the monthly bullish fair value gap. So what we can see here, we've been looking forward to see how price will take out sell side liquidity, because we can see this is the pullback. This swept to this low, gave bullishness, and now we can see that bearishness to the downside. Then last week I told us to see how price is going to still dip lower to the downside to take out the sell side and possibly give us what? Bullishness when price takes out the sell side liquidity. And we can clearly see price dipped into this weekly fair value gap. The first weekly fair value gap, which is within the monthly bullish fair value gap, which is our ideal draw on liquidity to the downside. And we can clearly see how price dipped into that, and we can see the rejection. Price gave us this candle wick. Price took out this sell side, took out this ideal swing low sell side liquidity, mitigating the weekly bullish fair value gap, which is within the monthly bullish fair value gap. And we saw what? The candle closed to the upside after taking out the sell side liquidity. So what we can clearly see is if we are anticipating bullishness before the bearish continuation, what we can clearly see is that here we have this candle high and this candle low, giving us this bullish fair value gap, which is now going to serve as an inversion fair value gap. So in the bearish movement, here we have bearish fair value gap. And within this weekly bearish fair value gap, we have the weekly inversion fair value gap. So we may see price continue to the upside to take out last week high point. If price is going to dip more higher to give us bullishness, then we'll be looking forward to see how price trade into this inversion fair value gap. And then we have the bearish continuation to the downside. So clearly now, what I'm trying to show you guys is we could see the possibility of price trading further to the upside to take out last week high points. So if price is going to go deeper to the upside into a sponsorship zone that we're identifying here from the weekly time frame, which we can see we have this bearish fair value gap, and within the bearish fair value gap we have this inversion. So we could see price deep here and then we continue bearish to the downside. So this is my perspective, but I'm not saying this is going to happen immediately when price react here and then we have bearishness to the downside immediately to the zone. No, that is not what I'm saying, but I'm also projecting a long-term expectation. But for the coming week, we should look forward to see how price trade to the upside. Since what we can have here is sweep of sell side, price has taken out external liquidity. We want to see return to take internal liquidity or fill up inefficiency. And you must understand that price must not completely fill up an imbalance, and then we have what reaction to the downside. So let's check the daily time frame. What we can clearly see in the daily time frame is this. Here is the weekly bearish fair value gap, this high and this low point, and this is the weekly inversion fair value gap. And in confluence, what we can see is the down close candle before this bullish impulse to the upside. So here in the daily time frame, we have this inversion fair value gap. So clearly, when price mitigated the weekly bullish fair value gap, which is within the monthly bullish fair value gap, which is our drawn liquidity to the downside, price took out sell side liquidity here. And now what we can see is price side giving us bullishness. Volume closed above this weekly bullish fair value gap after mitigating that. This is the next weekly bullish fair value gap within the monthly bullish fair value gap. So we can see bullishness, price giving us up close candles to the upside. Price now is reacting at this daily inversion fair value gap, and we can see that volume closed below that. So we could see the likelihood of what continuous bearishness, or we could see price give us what bullishness to the upside. Clearly we can see this is the last down close candle that took out sell side liquidity, and we can see that the bullish movement we had here, volume did not close above the high of this down close candle. So we can clearly see that we do not really have yet a clear bullish perspective, but then we have to wait to see how price delivers on Monday. We could see the possibility of bullishness to the upside. If we can see price close above the consequent encroachment of this inversion fair value gap, then we could see price aim for this weekly inversion fair value gap. This is the daily inversion fair value gap. If price closed above that, then we could see price aim for the weekly, and then we can frame bearishness to the downside. When we go to the 4-hour time frame, let's look at the 4-hour time frame. So here in the 4-hour time frame, we can see here we had this pullback, price fell to the downside. Now we can see we have this bullishness. You know, this is the high point. What we can see is that volume here did not close above here. All we know is that we can see that price took out the buy side liquidity, and here we had this bearishness to the downside. And what you can see from the 4-hour time frame is that we can see this bullish order block. Price is reacting at that bullish order block. Here price mitigated the weekly fair value gap, which you can regard as a demand zone, which is within the monthly bullish fair value gap. Now we saw this bullishness into this daily inversion fair value gap. So clearly now we'll look forward to see if price respects this bullish order block, then we could see bullishness to the upside. If price now trades to the downside against this bullish order block, then we could look forward to just have our continuous bearishness to the downside. But then if we have price trading above the bullish order block and price violates this bearish order block, because what you can see here, we have what? Buy side liquidity. So basically I'm saying if we see bullishness to the upside with volume closing above this, then we could see price retest this and we have bullishness to the upside into this zone before we can look forward to framing the likelihood of price giving us what? Bearishness now to the downside. So this is clearly what I'm expecting to see in the dollar index. So we would wait to see how price possibly delivers on Monday, and then that would help us to consider the bias we are to work with. So clearly I'm saying that if price doesn't respect this bullish order block and price breaks through that, then we'll look forward to what? Bearishness to the downside. Want to see price give us the continuous fall to the downside into the drawn liquidity in the monthly time frame. But then if we have price gives us bullishness and we see that we have clear close of price above the daily inversion fair value gap, then we could look forward to price trading into the weekly inversion fair value gap, and we have what? The bearish continuation to the downside. So this is just clearly what I'm expecting to see in the dollar index. Let's check the 1 hour time frame. In the 1 hour time frame, what we can see in the 1 hour time frame is we have this pullback, price fell. Here was this pullback, price fell. This is the inducement liquidity, volume closed above that, and we can see bullishness. But then price have not yet taken this ideal high points. Price built up stack of liquidity here, buy side liquidity. We have this internal structure markets structure shift, inducement liquidity, price took that out, continuous bullishness, break of structure internally, return now to take this sell side. Price is mitigating the 4-hour bullish order block. So if we have bullish continuation, then we would see price take out this buy side liquidity, and we can clearly see that this is going to act as a form of trend line liquidity also, and price may be attracted into this fair value gap. And you can see in the 1-hour time frame we have this buy movement before the bearish impulse. So clearly we have drop, base, drop. So we could see price trade into the zone, and we have the bearish continuation to the downside. But if price violates the 4-hour bullish order block here, then we could continue what? Bearish. Then we'll look forward to framing bearish movement to the downside into the monthly drawn liquidity, which is the monthly bullish fair value gap. And we'll want to be targeting trading into the consequent encroachment of that monthly bullish fair value gap. So clearly now you can see that in the 1-hour time frame, we have price giving us this trend. We can see we have a bullish trend here. So clearly now, if price violates that and violating the 4-hour bullish order block, then we'll just continue bearish to the downside. So except that happens, then we should be looking to bullish movement to the upside, to the possibility of price coming into the sponsorship zone, this weekly inversion fair value gap, and we have the bearishness to the downside. So this is what I have to show us, guys, in the dollar index. Let's check out the Euro USD. This is Euro USD, and clearly this is the monthly time frame. So just like the dollar index, you know, the Euro USD would go in the opposite direction to the dollar index. So what we can see is price mitigated the higher time frame sponsorship zone we have here, the monthly fair value gap. And we can see just the way the dollar index gave us indecision candle, we can also see that in the Euro USD. We can see how impulsive the month of March went, just the way we can also see impulsive bearishness in the month of March in the dollar index. So this was the first bearish fair value gap acting as our drawn liquidity. We're aiming to see how price trades into this before we could look further to see the possibility of any bearishness or bullish continuation. And what we can see clearly is the month of March just gave a very strong bullish impulse to the upside. Just the way we can see in the dollar index, we had a very strong bearish impulse to the downside to the drawn liquidity. So this became the next draw on liquidity, this monthly bearish fair value gap resting here. And what we can clearly see is that price mitigated that monthly bearish fair value gap here in the Euro USD. So let's check the weekly time frame. So here in the weekly time frame, what we can see is this is our drawn liquidity from the monthly time frame, and here in the weekly time frame we also have this other fair value gap resting here. So clearly now what we can see is within the monthly bearish fair value gap we have this weekly bearish fair value gap, and we can see how price traded into that. And now we had what? A down close week. Basically what I'm trying to say is that volume closed below this previous weekly candle and the swing high point. After mitigating this weekly bearish fair value gap, which is within the monthly bearish fair value gap. So what we can see here is, we had this rejection block that created this impulse to the downside that took out this low point. Now we can see when price returned into that, we can see how volume closed above this bearish fair value gap. We can see again further bullishness to the upside, taking out the high of the rejection block into this monthly bearish fair value gap, within which we have this weekly bearish fair value gap, which is the first zone we can see that price mitigated here. And we can also see further we have this drawn liquidity, and apparently we can also say we have this buy side drawn liquidity, relatively equal high points. So clearly now what we do be expecting to see is, based on CRT concepts that I've taught in the mentorship program, here we can clearly see that price took out buy side, also took out this buy side, mitigating this fair value gap. Volume closed below this weekly candle high and this swing high points. So here we have this weekly inversion fair value gap, And further to the downside, we also have this inversion fair value gap here in the weekly time frame. Clearly now, we've established that we have identified sponsorship zones here. We have this bullish fair value gap. Within the bullish fair value gap, we have this weekly inversion and also this weekly inversion fair value gap. So let's check the monthly time frame. So, in the monthly time frame, we can see this is the monthly bearish fair value gap, but we can see that the month of March volume is trading above it. And, we've not yet reached the end of the month. So we still have more trades to execute within this monthly candle. So here in the weekly time frame, clearly now we can see that we had this bullish impulse. The next previous week that just ended, we can see this other bullish candle giving us this bullish fair value gap, and within that zone we have the inversion fair value gaps. So clearly now, since we can see that price is reacting at this weekly bearish fair value gap and volume closed below this previous weekly candle and the high, so I'm expecting the possibility of price sweeping this low. We're looking forward to the possibility of price giving us this movement to the downside into this inversion fair value gap, and we have bullish continuation to the upside. So we can see that this is the bullish fair value gap. This is the inversion fair value gap. This is also the second inversion fair value gap within this bullish fair value gap in the weekly time frame. So I'm expecting to see the reaction of price within the zone. If price gives us a buy reason, then we buy to the upside, or price may dip lower into this other inversion fair value gap. So because we can see that price here reacted at this higher time frame bearish sponsorship zone, which is also the monthly fair value gap. But what we must notice is that price have not mitigated the consequent encroachment yet. So we would have the possibility that price reacted at the fair value gap to give us bearishness as a pullback, so that we can have the continuous bullishness to the upside. Because we can also see in the weekly time frame we have this draw on liquidity. So here in the daily time frame, what we can see from the daily time frame here is price reacted at this bearish order block here, and we can see how price was struggling to really break through that with volume above this bearish order block. So here is the weekly fair value gap that price reacted at, sweeping this bearish order block high points, and now we can see price giving us downward movements to the downside. We are having this bearishness. So we can see that price is really facing resistance at this zone. So now, based on the delivery here, we can see thus far is we had this bullish candle to the upside, but then price failed to continue bullish after price reacted at the weekly bearish fair value gap, and we're seeing this bearishness to the downside. So here we have a sell side liquidity, which is the weekly low points, because this is Monday candle. This is Monday, Tuesday, Wednesday, Thursday, Friday. So we may see price take out last week low points before we have bullish continuation. So you can see here in the daily time frame, the first inversion fair value gap we have here that we identify from the weekly time frame. Here in the daily time frame, we can see this up close candle before the bearishness to the downside. So we could see price really react at this inversion fair value gap after taking previous week low points, and then we have bullish continuation to the upside. So this is based on the higher time frame. So let's check the 4-hour time frame. Here in the 4-hour time frame, what we can clearly see in the 4-hour time frame, this is a weekly bullish fair value gap zone from this high and this low. Within that, we know we have the weekly inversion fair value gaps. So clearly now in the 4-hour time frame, what we can see in the 4-hour is price reacting at this bullish order block, and now price has given us this bullish impulse to the upside. But price here reacted at the weekly bearish fair value gap, which is within the monthly bearish fair value gap zone, and we can see this rejection candle. Price returned to retest the rejection, and we had this bearish continuation to the downside back into this 4-hour bullish order block. So clearly now we can see price has given us bullishness to the upside. So if price violates this down close candle before this bullishness to the upside, then we'll be looking forward to see price trade to the downside into this inversion fair value gap, considering this as a trend line liquidity. Since clearly you can see from the 4-hour time frame, what we are seeing is reaction at this 4-hour bullish order block. Here we have this fair value gap. If we have and see that price trades to the downside, violating this fair value gap here in the 4-hour time frame, and the last down close candle we're having here before this bullishness, then what we're going to see is the likelihood of price trading bearish to the downside into the inversion fair value gap before we have the bullish continuation to the upside. Let's check the 1-hour time frame. In the 1-hour time frame here, what we can see is we have the 4-hour bullish order block. Price reacted at that zone. Here, first give this movement a return, and we have this push to the upside. So what we can see is this is that swing high, the external swing high. Here we also have this internal movement. So meaning this is the mitigation block, and in confluence we have this bullish fair value gap. So we are seeing price return reacting at that. What we saw is price reacted at the bullish order block in the 4-hour time frame. Price traded into this bearish order block here in the 1-hour time frame. We can see a rejection block again here in the 1-hour time frame when price mitigated the weekly bearish fair value gap. So clearly now we can see that price is trading between the 4-hour order block, and here we have this 1-hour bearish order block. The 4-hour bullish order block, the 1-hour bearish order block. Price went into that. We can see price mitigated that rejection to the downside back into this mitigation block in confluence to this bullish fair value gap. So clearly, if price violates this fair value gap and trades to the downside, then we could see price gives us continuation to the weekly inversion fair value gap. But what we can now see is price reacted at this bullish fair value gap, respecting the consequent encroachment. Here we also have this down close candle and the bullish candle. So clearly, if price keeps trading above this down close candle before this bullish candle, then we could see the possibility of price trading continuously now to the upside. So we could look to see this. If price violates this bullish fair value gap and we see bearish impulse, then we'll be looking forward to see price takes this as trend line liquidity into this weekly inversion fair value gap, which is within the weekly bullish fair value gap. So this is what I have to show us, guys, in the EURUsd. Let's check out the GBPUSD pair. This is GBPUSD, and we can clearly see the bullish impulse also here in GBPUSD. This is a weekly time frame. Price closed above this bearish fair value gap, which is going to serve as an inversion fair value gap to provide support to price to further send price to the drawn liquidity and the weekly time frame, this bearish fair value gap. Clearly, what we can see is price reacted at the consequent encroachment of this candle week, and we can see price is just failing to have this impulse going above this candle week to trade into this zone. So we are seeing that price took out this buy side liquidity, volume closed below the high of this previous weekly candle. So based on the weekly time frame, we can also see here we have the bullish fair value gap in the weekly time frame. So clearly now, if we're looking forward to trade expectation, then we could look forward to see how price takes out last week low points into this weekly inversion fair value gap, which is within the weekly bullish fair value gap. And then we can look forward to continuous bullishness to the upside. So this is the expectation from the weekly time frame. So let's drop to the daily time frame to look at other sponsorship zone. So here in the daily time frame, what we can see, during the review I conducted within the week, that is within last week, I made emphasis about this accumulation here. Price was just facing strong resistance here, no flexibility for price to just continue strongly bullish to the upside. So what we can see from the daily time frame here is this is the weekly inversion fair value gap, and you can see the weekly inversion fair value gap is also within this daily bullish fair value gap, and this is the weekly bullish fair value gap. So what we can see clearly is price is facing resistance at this consolidation zone, and here we also have this bullish order block. Prices failing to break above this zone, and again prices also now failing to break below this bullish order block. The price have not mitigated the consequent encroachment, the mean threshold of the bullish order block. Now we have price push to the upside. Clearly what we can see here is price to cut buy side, volume failed to close above, and then we had bearishness to the downside. This was Monday delivery, and then we had Tuesday, Wednesday, Thursday, Friday. So price is just trading within this consolidation high and also this daily bullish order block. So this is last week low points. So if price violates this bullish order block, just the way I pointed out from the weekly time frame, then we could see price take out this previous week low points into the weekly inversion fair value gap, which we can see that we have this daily bullish fair value gap also. So we could see price trade into that, and we have the bullish continuation to the upside. Let's check the 4-hour time frame. Here in the 4-hour time frame, within the consequent encroachment of the daily bullish order block, we can see here we have this fair value gap, this bullish fair value gap, and this is the last down close candle before this bullish movement. Price has taken out this sell side liquidity. This is the last down close candle that took out the sell side liquidity, sponsored bullishness, gave this inducement liquidity. Price came back to the downside, took this out. But what we can see is that price is just failing to have either impulse to the upside or impulse to the downside, though we can see that it is trending to the downside. So clearly we need to wait to see how price trades into this zone, since this is the down close candle before the bullishness, and then we have fair value gap. Clearly also we have this unmitigated weak. So below previous week, this is the low of last week, we can see we have this bullish fair value gap. So clearly now, if we do not have bullish continuation from this zone, then we should look forward to see price possibly trades to the downside, taking out this last week low points into this weekly inversion fair value gap. And you can see here we had this down close candle before the bullishness to the upside, and then we can consider to see price trade bullish. But if price then respects this bullish order block, the down close candle here that sponsored this bullish movement, because we can see here price took out sell side liquidity, then we'll look forward to see how price reacts possibly within this fair value gap when price is mitigating that zone. If price gives us a buy reason, then we continue bullish to the upside. So this is my expectation in the GBPUSD. Let's check the USDJPY pair. So what we can see is price took out this sell side liquidity bullishness, price took out this buy side mitigating this fair value gap low point, and we had the fall to the downside. So what we can see clearly now, we have this breaker, because this is the up close candle that sponsored the bearishness that took out sell side. Now we had bullish impulse, inducement liquidity, price fell, took that out, price reacting at this fair value gap. The price have not really mitigated the breakout block, and here we have this bullish order block, the down close candle before the bullishness to the upside. So clearly in the weekly time frame, what we can see is price reacted at this bullish fair value gap, respecting the consequent encroachment, took out sell side liquidity, volume closed above. So we could look forward to see how price trades into the mean threshold of this bearish order block, and then that will determine the bearish continuation to the downside. So clearly for the coming week, would see the likelihood of price giving us further bullishness. Price may give us an up close week, or we could see price print the down close week. So clearly this is it. Price took out sell side. We are looking forward to see if price may take out last week high, and we have bearish continuation to the downside. So let's check the daily time frame to have a clearer perspective to that. So we know that the trend is bearish. Based on the daily time frame, we can see price falling to the downside here. Price finally took out this low points here. So this is the mean threshold of that bearish order block from the weekly time frame. And here we can see that we had this pullback. Price took out this buy side liquidity, took out this high also, bearishness. Now we are seeing price reacted at the weekly bullish fair value gap, and we are seeing price giving us bullishness. We have the single candle order block here, because we can see price took our sell side here. We had this movement to the upside, volume closed above, and then this next candle, the volume closed above this high. Now we can see price return to mitigate this candle, and we are seeing bullish reaction to the upside. So we could see the possibility of price going bullish to this level, or price may also now, based on this daily time frame, take out this buy side liquidity, and then we have the bearish continuation to the downside, and possibly price may dip higher into the rejection block here. So clearly what I'm saying is this. So we could see this happens in price delivery. Price would come, this is the main threshold of that bearish order block from the weekly, but here we have this buy side liquidity, so you could see price takes that out, and we have bearish continuation to the downside. Let's check the 4-hour time frame. In the 4-hour time frame, we can see bearish delivery of price to the downside, and here we have price reacted at the weekly bullish fair value gap. We have this impulse that took out this high. So we have this internal structure, market structure shift, price return, reacting at this bullish order block. What we can see is we had this return to the upside, price fell, took out sell side liquidity. We had push to the upside. We have this breaker. We have the confluence of this bullish fair value gap. So we could see price gives us this movement based on the 4-hour time frame. Now we could see the likelihood of price dipping to the downside, and then we have the push to the upside to take out this buy side liquidity, and then we have bearish continuation to the downside. So this is my expectation in the USDJPY pair, except otherwise price violates the breaker and the bullish order block. Here we have the likelihood of maybe seeing price movement to the downside, and we have this. So this is my expectation in the USDJPY pair, guys. So let's check out the gold pair, and that brings us to the end of the weekly Forex forecast. So far, gold has really been giving us a clear bullish structural perspective, clear bullish buyers. So if you want to join the daily Forex forecast, then you can just do well to join the gold membership in the YouTube community, because I'm looking forward to giving daily Forex forecast, but that would be based on a join membership. So meaning you have to join the gold membership for you to have access to the daily breakdown of the markets, so that you can be able to leverage that information to execute your trade within the week. So this is a weekly Forex forecast, but you know, the narrative of price when the market opens will begin to interpret that on a daily basis, so that you can have a perspective of the zones to mark out to expect to take your entry. So for you to have access to that, then you really need to join the gold membership. So this is gold, and I've really been leveraging the movements in gold. So what we can see is that gold deep into this bullish weekly fair value gap that I pointed out previous weeks, 2 weeks ago, I think, or 3 weeks ago. And we saw bullishness to the upside. So last week I told us to see how price is going to trade more higher to take out this high, and we clearly identified those setups from lower time frames. And I think on Wednesday or Tuesday I also dropped a free daily forecast, which is in the YouTube channel. You can do well to check that and see how price clearly reacted and give us bullish continuation. So what we can see from the weekly time frame, price respected the bullish weekly fair value gap, respected the consequent encroachment, give us the bullishness. Now we can see volume closed above this high. So from the daily time frame here, we have the daily fair value gap, which I pointed out also previous weeks. And what we can see is price took out sell side liquidity, give us bullishness. And what I pointed out and caught our attention to is the inversion fair value gap here, where price returned again to the inversion fair value gap, and we had what? Bullish continuation. So from the weekly time frame, we can see volume closed above the bodies of this bullish candle and this bearish candle. So we could see the possibility of price deep into the downside. Price may not necessarily have to retest this clearly. It could retest the candle wick here, and then we have the bullish continuation. So let's check the daily time frame. So in the daily time frame, what we can see is we have this breaker, because this is the last up close candle that sponsored this bearishness that took out sell side, and now give us bullishness. So clearly for the gold pair, we have this bullish fair value gap. We have this breakout block in confluence to the level marked from the weekly time frame. So we can see here we have this last sell move before this bullishness. So what we have here is the anticipation of an institutional order flow entry drill. So that is what we'll be looking forward to see here to frame the bullish continuation to the upside. So we have this bullish fair value gap. So we'll be looking forward to see how price dips to the downside. In confluence, we have this daily breaker, and then we have our bullish continuation. This is it. I'm looking forward to see price drops here, and then we have the possibility of continuing bullish to the upside. Let's check the 4-hour time frame. So in the 4-hour time frame, we can see that zone is actually an accumulation. We can see consolidated price delivery here. So we have also 4-hour bullish fair value gap. So we'll be looking forward to see how price dips to the downside, and then we can begin to look forward to frame our bullish continuation. If price dips lower beyond this zone, then clearly where price would be aiming for is this bullish fair value gap left here. So because we can see this is the level we mark from the weekly time frame. So meaning we can see the possibility of a week going below that zone to mitigate this and give us the bullish continuation to the upside. So when the market opens, we'll begin to have daily perspective to the price narrative. So for you to leverage that information so that you can trade, then you can do well to join the gold membership. So this is all I have to show us, guys, for the coming week. Cheers, have a profitable week, and God bless you all.